What's up, guys? Sam here. 7 tips today on preparing yourself for your first ever buy-to-let mortgage. A question I get asked loads and loads is, I'm just starting out, I need to get myself ready for my first buy-to-let mortgage. What do I need to do? So I've got 7 tips to help get you prepared. So tip number 1, and this goes pretty much across the board, is get a hold of your credit file and make sure that it's all up to date and it's looking spick and span. Equifax, Experian are the 2 main ones, but there's various other ones, ClearScore, etc., where you can go and get a view of that. Just make sure everything's up to date. Make sure there's nothing on there that's incorrect. Make sure every liability that you've got is on there. Make sure every account that you've got is up to date and showing the correct information. Pretty much every single mortgage lender is going to do a credit search on you to make sure that information is bang up to date. Number 2 is get all your documents ready. Okay, so there's various different documents that are just standard that pretty much all buy-to-let mortgage lenders are going to ask for. Number 1 is of course your ID, passport or driver's license. Get a really good copy ready so that you can send that over. Proof of address. This needs to be a utilities bill within the last 3 months. Don't use your mobile phone bill, and make sure that your name is clearly on there and your address is showing on there as well. Income's a big important thing. Yes, I know everyone keeps saying buy-to-let mortgages, they're all about the property. What about, they're not about my income. Most lenders are still going to ask to see proof of your income if you're employed. That means potentially 3 months pay slips. If you're self-employed, 1-2 years self-assessment tax returns or company accounts. Make sure you've got these all nicely prepared. Also, you need your bank statements. They are there to show that financially you're pretty stable, and they can make sure that you're not spending loads of money at Betfred or paying back Wonga loans, for example. Does Wonga even exist anymore? I'm not even sure if Wonga exists anymore, but there we are. And of course they're there to match up those payments from your pay slips going into your bank statements as well, into your bank accounts, so they can marry those up. Key also is a savings account statement. If you're purchasing a property, you need that to show your deposit monies that are going to be readily available. Lenders are going to need that. Okay, so that's number 2. Make sure you get all your documents up to date and in all in a row. Number 3, address history. Make sure that you clearly have readily available at least 3, maybe even 6 years worth of address history and dates, not maybe exact dates, but months anyway, where you've moved in and out of those properties. That's massively important for any lender. They're going to ask you that. They want to track where you are, and definitely, At the moment, look, we've just had a general election, so I'd like to think that everyone is on the voters' roll and the electoral roll. But make sure you're on there. It's a really easy way of lenders being able to track where you live, which is obviously massively important. Number 4 then, ownership structure. Now, a lot of people nowadays, given some of the changes in taxation laws, are opting to purchase properties in a limited company. Now, previously you just buy it in your own name and that would be all fine. People still do that, but make the decision early doors as to which structure you're going to go down. That's going to decide which lender you go for, probably, and definitely you need to seek some independent advice on this from a proper tax advisor. I'm not a tax advisor. I'm not giving you any advice on this. I'm just telling you to go and get the advice. Either way could work for you. Some even purchase property in LLPs, although it's not necessarily as popular as other choices. But make a decision early doors and make sure that whatever structure you do is correct. If you do go down the limited company route, it's really important that for a buy-to-let perspective, you're setting it up in something called an SPV, not a trading company, because lenders don't like trading companies. And make sure your nature of business and they're called SIC codes on company's house, on your company records, are showing correctly that you are going to be renting and letting real estate. So make sure that they're correct as well, because lenders are very keen on those sorts of things. Number 5 is lender paperwork. So if you know what kind of ownership structure you're going to have, your chances are you know which kind of lender you're going to go for. Once you've chosen whichever lender that is, make sure that you get their paperwork up to date. That would mean an application form completed and signed, usually by all the owners stroke shareholders. They'll ask for a direct debit mandate, so that they know what bank details to take the money from each month for the monthly payments, and usually a declaration as well, to say that you agree to their terms and conditions. Get it ready nice and early. Some lenders might want original copies of those signatures. Some will be happy with scans. That's down to the lender, but get it ready early doors so you can send it all off with the application. Number 6 then is choose a good solicitor. We are moving away, I would say, a little bit from traditional panels of solicitors where a lender will say, right, we have a panel of 200 solicitors. If your solicitor is not on here, then you need to choose another one. But they do still exist. So if you're going for a Halifax mortgage, you won't be. If you're going for a buy-to-let, so don't do them. Nice one, Sam. If you're going for a Birmingham mid-size mortgage, that's better. Make sure that your solicitor is on the panel of solicitors beforehand, and double check that. Sometimes some lenders will have like sort of criteria, so they might say, right, we need the solicitor to have at least two partners, 3 SRA managers, whatever they're called, or they might have sort of limitations on what sort of PI cover that they have, 1, 2, 3 million pounds worth of PI cover, something like that. But do your research on this first. Make sure that the solicitor that you're going to use is actually going to be the kind of is actually going to work with the lender that you're going to be submitting your application with, because obviously that's massively important. Okay, and lastly, number 7 is think about what you're actually going to be doing once the application has been successful. You need to have a lettings agent ready to start renting the property for you, and if you're going to get the property managed, make sure you've got all that paperwork ready and in place as well. Some lenders are going to take those payments into account when assessing the rental viability, the viability of the loan. So make sure that you know all of these facts and figures beforehand. It's always good to present this kind of information to a lender. It adds a little bit of credibility to you. And even from your point of view as well, you want to know that as soon as this property has been purchased, you can get it on the market for rent pretty much straight away. Get a tenant in there, start earning your cash. That's the whole point of what we're doing. Okay, so that's all 7. Just to summarise, number 1 was to get your credit file up to date. Number 2 was to make sure you've got your documentation ready, your ID, your proof of address, all that kind of stuff. Number 3 was to actually make sure that you got all your address history up to date for the last 3 to 6 years. Very, very important that. 4 was choose your ownership. Make sure you decide whether you're going to go for personal ownership, limited company ownership. Number 5 was your lender paperwork. Make sure that direct declarations, direct debit mandates are signed, dated, and ready to rock. Number 6 was make sure that you choose your solicitor. Make sure they're on panel with the lender that you're going with. Massively important. And lastly was choose and organise your lettings agent and management agent early doors, as some lenders will take those costs into account. Cool. Look, I hope that's massively helpful for you. It's a question that I've been asked quite a few times recently by some, let's say, newbies. I don't know any other word to use other than newbies. So I thought, as usual, make up a little video, share my knowledge with the world. Hopefully that was really, really helpful. It's getting pretty late. I'm still in the office. I've got a few things to do. So I'm going to go now. See you later.